Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Desila Utami, NPM 2441201 from Accounting Class 24A. On this occasion, I would like to present about Independent Auditors Report. Alright, let's get into the discussion. Definition of Independent Auditors Report. An independent auditor's report is a formal report prepared by an external auditor after examining a company's financial statements. The report contains the auditor's opinion about whether the financial statements are fairly presented according to accounting standard. The report is called independent because the auditor must be objective and not influenced by the company being audited. Audits are generally conducted according to professional standard issued by organizations such as Ikatan Akuntansi Indonesia and international standard developed by the International Auditing and Assurance Standard Board. The main purpose of the report is to increase the credibility of financial statements and provide assurance to users. Purpose of the Independent Auditor Report. The main purpose of the auditor report are to express the auditor's opinion on the fairness of the financial statements, to increase the credibility of financial information, to help stakeholders make economic decisions, to improve transparency and accountability in companies. Users of the auditor report include investor, creditor, governments, management, and the public. Companies listed on the Bursa Efek Indonesia must usually publish audited financial statements. Structure of an independent auditor's report. 1. Title. The report usually begins with the title Independent Auditor Report. This title emphasizes that the auditor is independent. And 2. Address. The report is usually addressed to shareholders, board of commissioner, board of director. And last, opinion paragraph. This is the most important part of the report because it contains the auditor opinion on the financial statements. And next, basic for opinion. This section explains the audit was conducted according to auditing standard. The auditor is independent. Sufficient audit evidence has been obtained. And management's responsibility. Management is responsible for prepare financial statement, maintaining internal control, preventing fraud and error. Auditor responsibility. The auditor responsibility is to perform audit procedure, obtain audit evidence, evaluate financial statements, and express an audit opinion. Auditor signature. The report must be signed by the public accounting firm and the audit partner. And last, date and address of the auditor. The report includes the audit completion date and the location of the audit firm. Next slide. Types of auditor opinion. 1. Unqualified opinion, or WTP. This opinion means that the financial statements are fairly presented in all material respects in accordance with accounting standard. It is considered the best opinion a company can receive. Condition for this opinion: sufficient audit evidence is obtained, no material misstatements, financial statements follow accounting standard, and internal control is adequate. And 2. Unqualified opinion with explanatory paragraph. In this case, the auditor still gave an unqualified opinion, but adds an additional explanatory paragraph to highlight an important matter. The financial statements are still considered fair. Example of situation is change in accounting methods, legal uncertainty, going concern issues, and important disclosure is not in the notes. And number 3, qualified opinion. Qualified opinion means that the financial statements are generally fairly presented, except for certain specific issues. Causes is limitation in audit scope, minor departure from accounting standard, and insufficient evidence for certain accounts. And number 4, adverse opinion means that the financial statements are not fairly presented. This happens when misstatements are material and pervasive. Causes as major violations of accounting standard, significant financial statements, misstatements, and financial manipulation. Disclaimer of opinion. That means the auditor does not express an opinion on the financial statements. This happens when the auditor cannot obtain sufficient evidence. Causes a severe limitation of audit scope, lack of sufficient audit evidence, auditor independence issues, and significant uncertainty. And importance of the independent auditor report. The auditor report is important because it increases trust in financial statement, provides assurance to investor and creditor, ensures transparency in companies, and last, support economic decision making. That's all my presentation about independent auditors report. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.